Hey everyone, welcome back to Cashegories, where we break down the systems, strategies, and stories that drive wealth, power, and opportunity. Today, we're tackling a high-stakes financial showdown. President-elect Trump's fiery warning to the BRICS nations and the bold threat of 100% tariffs if they attempt to dethrone the U.S. dollar. And this isn't just about economics. It's about the future of global finance, trade, and geopolitical influence. Whether you're an investor, a policymaker, or just someone trying to understand the world, this story is a game changer. Stick around because by the end of this video, you'll understand how we got here, what's at stake, and what it means for America's financial future. Let's start with Trump's headline-making statement. Here's what he said. The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty U.S. dollar. Otherwise, they will face 100% tariffs and should expect to say goodbye to selling into the wonderful U.S. economy. Let's break that down. First, Trump is signaling that the dollar's supremacy is non-negotiable. Second, he's making it clear that any move to challenge the dollar will have severe consequences, specifically losing access to the U.S. market. This is the world's largest economy we're talking about, accounting for nearly 25% of global GDP. Losing access to American consumers and businesses is a massive threat to any nation reliant on trade. But why is this happening now? To understand, we need to look at the history of the dollar's dominance and how BRICS is working to challenge it. To appreciate the stakes, we need to go back to the origins of the dollar's global dominance. After World War II, the world was in chaos. Economies were shattered, and nations needed a new financial order to rebuild and stabilize international trade. That's where the U.S. stepped in. In 1944, at the Bretton Woods Conference, 44 nations agreed to make the U.S. dollar the backbone of the global financial system. Why the dollar? Because the United States had two major advantages. One, gold reserves. At the time, the U.S. held 75% of the world's gold reserves. One, the dollar was pegged to gold, giving it unparalleled stability and trust. Two, economic power. The U.S. economy was booming, accounting for nearly half of global GDP after World War II. This system worked well for decades. Nations could trade confidently, knowing that the dollar was as good as gold. But then came the 1970s. In 1971, everything changed. President Nixon took the U.S. off the gold standard, ending the dollar's direct link to gold. Why? Because the U.S. was running huge deficits, spending heavily on the Vietnam War and domestic programs. Other countries started demanding gold in exchange for their dollars, and the U.S. simply didn't have enough to meet those demands. By turning the dollar into a fiat currency, meaning its value was based on trust in the U.S. government, the U.S. took a huge gamble, but it paid off. How? Enter the petrodollar system. In 1974, the U.S. struck a deal with Saudi Arabia. In exchange for military protection and economic investment, Saudi Arabia agreed to price all oil sales in dollars. Other OPEC nations followed suit. This was a game changer because oil is the lifeblood of the global economy. Every country needed dollars to buy energy, ensuring ongoing demand for the U.S. currency. Think about this. If Japan wants to buy oil from Saudi Arabia, it has to exchange yen for dollars first. If Brazil wants to import oil, it needs dollars too. This created a system where the dollar was indispensable for international trade, even for countries that didn't directly trade with the U.S. Now let's talk about the challengers. BRICS, Brazil, Russia, India, China, and South Africa, are a coalition of major emerging economies. Together, they represent over 40% of the world's population and a significant share of global GDP. Recently, the bloc expanded to include countries like Saudi Arabia, Iran, and the UAE, further increasing its influence. But why are they challenging the dollar? Let's break it down. 1. Sanctions. The U.S. uses the dollar as a geopolitical weapon. 1. For example, Russia faced severe sanctions after its invasion of Ukraine. 1. By controlling the dollar-based financial system, the U.S. can cut countries off from global trade. 2. Economic sovereignty. BRICS. Nations want to reduce their reliance on U.S. monetary policy. 2. When the Federal Reserve raises interest rates, it strengthens the dollar, making it harder for developing nations to repay dollar-denominated debt. 3. Global power shift. BRICS envisions a multipolar world where no single nation dominates. 3. A new currency would symbolize their independence from the Western financial system. So how is BRICS challenging the dollar? Here are some examples. 1. De-dollarization. Countries like Russia and China are conducting more trade in their own currencies. 1. For instance, China has signed agreements with multiple nations to settle oil and gas trades in yuan instead of dollars. 2. Gold accumulation. BRICS. Nations are buying gold at record rates, potentially to back a future BRICS currency. 3. The new development bank. BRICS established this bank as an alternative to Western-led institutions like the IMF and World Bank. 3. Its goal? 3. Fund projects in local currencies rather than dollars. These moves are chipping away at the dollar's dominance, and Trump's 100% tariff threat is a response to this growing momentum. Now let's dive into the specifics of Trump's tariff threat. A 100% tariff means doubling the price of goods imported from BRICS nations. Here's what that looks like. 1. A $1,000 iPhone from China? 1. It would now cost $2,000. 2. A $10 t-shirt made in India? 2. Get ready to pay $20. 3. Even critical goods like medicines, electronics, and machinery could see massive price hikes. This move is designed to hurt BRICS economies by making their exports uncompetitive in the U.S. market. But it's not just about economics. It's a political statement. Trump is saying, don't mess with the dollar or you'll pay the price. For American consumers, this would mean higher prices on everything from clothes to cars. Inflation, which has already been a challenge, could spike again. However, there's also an upside. Higher tariffs could encourage companies to bring manufacturing back to the U.S., boosting domestic jobs and reducing reliance on foreign imports. For BRICS countries, losing access to the U.S. market would be a major blow. China, for instance, exports over $500 billion worth of goods to the U.S. annually. A 100% tariff could force companies to slash production, leading to job losses and economic instability. Globally, these tariffs could trigger a trade war, causing supply chains to break down and financial markets to tumble. Countries might be forced to pick sides, align with the U.S. and the dollar, or join BRICS in creating a new financial system. This isn't just about dollars and cents, it's about global power. Tariffs could push BRICS nations closer together, creating a rival bloc to the U.S. and its allies. Imagine a world where trade is split between two competing systems, one led by the dollar and one led by a BRICS currency. This would fundamentally change the global economic order. So where does this leave us? The fight over the U.S. dollar is about much more than money. It's about influence, stability, and the future of global trade. Trump's tariffs are a high-stakes gamble. Will they preserve the dollar's dominance? Or will they accelerate the rise of a new global financial order? Only time will tell. Thanks for watching, and don't forget to like, subscribe, and share this video. I'll see you next time on Cashegories, where we keep you informed about the forces shaping our financial future.